The Federal Reserve is sitting on an $8 trillion mountain of stolen goods that it needs to get rid of. That could strangle credit, hike mortgages, and accelerate the recession. Now, most analyses of the Fed focus on interest rates, how they pump out easy money, and then they turn around and crash the banks and the wider economy. But in 2008, the Fed invented a second huge destabilizer called the balance sheet, meaning the assets that the Fed owns. So the Fed prints money by typing zeros on Excel sheets and then loudly declaring that it is money. Then they use all those magic zeros to buy stuff. Generally, they buy government bonds and mortgage-backed securities. The stuff is an asset. It's stolen from us, of course, but for the Fed, it is an asset, hence balance sheet. Now, since 2008, especially since COVID, this balance sheet has exploded, going from hundreds of billions, that was traditional back to the 70s, to almost $3 trillion in the wake of 2008, and then soaring to $9 trillion during COVID, when there was a totalitarian lockdown to buy. The balance sheet has since come down just a hair to about $8 trillion, but for perspective, that is close to half of all the bank accounts in America, all guarded by a dragon in the basement of the New York Fed, courtesy of those magic zeros. Problem is what to do with all those stuff. After all, those zeros became money, meaning they drove inflation, diluting existing dollars like water into wine. So far, we've only gotten part of that inflation, roughly half, going by the amount printed. The rest is locked away in savings. That means either the Fed has to reduce their balance sheet, they have to sell all the stuff and cancel the zeros, or they have to accept that high inflation will continue for years as the rest of that $8 trillion leaks out into inflation. Problem is, selling all of those assets will make their price go down. That's supply and demand 101. I've talked in recent videos about the tsunami of government debt hitting markets this year, about $10 trillion between refinancing old debt and fresh deficits. Problem is, nobody is buying. So banks are not buying. They almost had a failed treasury auction a few weeks ago. The Chinese and Saudis are not buying. They're diversifying from the dollar. Meanwhile, China has its own industries to bail out. So if the Fed is also selling while Janet Yellen is running around shaking a $10 trillion cup, there is nobody to buy. So fine, don't sell treasuries, just sell the other big hunk, which is the mortgage-backed securities. That is a cool $2.5 trillion of the Fed's hoard, and it would save Janet Yellen from herself. Problem there is that the Fed has been subsidizing housing for over a decade. In fact, that's a big reason why house prices went up so much. So if the Fed now flips to selling, it could actually drive up mortgage rates that are already at the highest in a generation. Now, given the housing market is essentially frozen at the moment, specifically because of high mortgage rates, and also given that the vast majority of Americans' net worth is in their house, in the equity, the Fed is very afraid to break housing, as it should be. So what's next? Brought to you by Unchained. By handing the lockdown gang $6 trillion to make their dreams come true, the bozos at the Federal Reserve crammed an elephant into a canoe. There is, at this point, no elegant way to get it off. Okay, we'll be watching. See you next time.